Good morning. Vince Lanci. It's Friday. Today we'll be talking about a report that came out actually last week from Michael Oliver. MSA has a secular comment on the big picture for stocks in general, for commodities versus stocks, and gold versus stocks. We'll be touching on a little bit of that today and hope to speak with him next week. We'll also be talking, we have a lot on our plate here, so let's try and move it quickly. And in premium, we have ING has a nice report on commodities discussing mining, and Morgan Stanley is discussing Fed policy. Markets, 10-year yields, 454 down 2, the dollar 108.15 down 27, the S&P 500 down 55. That's a big overnight move at 58.19. The VIX 25.11 up 1. That's big. Gold 26.03 up 9, very big. It's only $9, but everything else is falling out of bed again. Silver 28.90 down 12, to be expected. It's an economic metal. We'll talk about that in a little bit. Copper 404 unchanged bid. WTI 69.45 down 15. Natural gas 343 very strong, up 3 cents today. Bitcoin continues to crater, 93.8 down 3,500. Ethereum 3,200 down 183. Palladium 908, 907 up 2. Platinum 929 up 5. Gold, silver 90. That's a sale very soon. I don't know when, but we're looking at it. Grains are up. Soy, corn, and wheat all look very good today. Okay. Homepage, Powell's inflation flip-flop was political. That's what we said yesterday. We put out a post yesterday later in the day breaking down the BRICS physical behavior. Central banks double down on gold. We did a breakdown of a Goldman report. We have another one. The other one will be coming out with this weekend. The pushback report. That's the one that I think we care the most about personally. Anyway, we'll talk about that. And then special founders reading, which remains anonymous. Discussion. All right, we have several things, so I'll work through a couple of them and we'll get to the main events, all right? So Indonesia's mining cuts. Indonesia is considering implementing deep cuts to the nickel mining quota, primarily to support the falling prices of the battery metal. In zinc, market reports suggest that Toho Zinc company located in Japan will shut down its unprofitable zinc smelting business by the year end. Okay, you can read the rest of that. That means there is less silver concentrate. If you're not mining zinc, if you're not mining nickel, if you're not processing those, because we're in a kind of a slowdown in that respect, well, that means there's less silver in concentrate form. And having spoken with a refiner and minter, raw silver is going up in price right now as of this month. So you're seeing the effect of base metals gearing down and the effect of China paying for concentrate in increasing supply. So we have that full analysis at the bottom. Most of it is focused on energy and the Fed rate cut. Next, Hartnett's report is coming out this week. He's going to go on vacation. So Hartnett, we mentioned yesterday market breadth. This is tying into gold. So work with us here. Market breadth is dire. There is a widening gap between S&P 500 market cap and the S&P 500 X the Magnificent 7 market cap. The S&P 500 is up 23%. The S&P 500 without the top 12 stocks is only up 8%. Now, it's even lower than that because once you take out the leaders, the other stocks drop. When you lower the tide, all the boats sink, and some of them sink even more. Both U.S. and global equity breadth remain dire. Winners must keep winning to keep stealth correction under the hood. Stealth correction, he's saying that we're in a stealth correction and that several stocks are being held up for whatever reason by whatever entity, and that's keeping the bottom from falling out. And we're close to the bottom falling out. And there's a chart to that effect. I'll click on it for you. And it doesn't get any bigger. Well, you'll have to just look at the picture in the post. Real rates above 2.5%, and the S&P trailing PE show 25 times, above 25 times. This ain't a great time for the Fed and the U.S. government to lose control of the bond market. So there, I've been all about breadth, looking at the stock market last couple days and going back and looking at a couple things that were written by other people. Michael Oliver actually ties it into what we're talking about today. So let's get to that. MSA excerpt, Secular Trends of Stocks and Commodities. Now, it's an 8-page report. There's a lot in there, heavily focused on stocks and why we could be at a turning point. And I think we're getting close to it. But there, and he compares them to other markets. And zooming out, he had a little section there on gold versus stocks. And well, I remember every one of these time frames. Let's read what he has first. Okay. So this is gold versus the stock market. All right. So the S&P 500 versus gold is a chart that I used. So going back to, that's 1961 on the left, and that's 2025, which is where we are now. And you have the upslope, that's gold going up in value relative to stocks, gold going down in value relative to stocks. And for the last 5 years or so, we've been in a sideways range. Jordan from the Daily Gold and I talk about that frequently. That's one of his pet peeves, if you think about it. Okay, so we'll come back to that chart in a second. Here are the ranges that he talks about. Between 1972 and 1980, we were in a stock market bear, and then came the wasteland for price while gold soared in net price. The spread exploded. Oh, I wish I can have them both up, can I? I can. Right. 1980, by the way, 1972 to 1980, I remember that. Little kid, bought first piece of jewelry I ever bought for someone then in gold, because gold could never go down. I remember that. It was like 1980. All right. 1980